Hey guys, today I came with another video, and then today I will show you how and why I took a trade on gold in February 16, today Monday. So firstly, I will recommend you that you should see the previous videos in order to get some highlights about my strategy and then to get some clues about and ideas about my strategy. So today I will show you the full breakdown of this gold market that I took today. So let's go. Firstly, as you all know, as I told you in the previous videos, firstly we should look for our bias, and then my bias is most of the time in 1 hour or 4 hour, but sometimes I look at daily charts and then sometimes 15 minutes. But today I look at bias in 1 hour time frame. So no, my body in a 4 hour time frame, and then after I get the zones in a 4 hour time frame, I look for more confirmations in 1 hour, 15 minutes, and then at the last for entry I look for 3 minutes and 5 minutes. Let's go to the video. Firstly, we should look to the 4 hour time frame. The 4 hour time frame. Yeah. So this is the principal time that you should focus more, because your bias is the one that predicts your setups, that predicts your trade. So firstly, as you see here, look here, it was in a massive bearish momentum here, but once it ends the bearish momentum, the market starts to return back to the bullish momentum and then starts to take higher highs, as you see here. But after taking this higher high, the market somehow counts this liquidity level, this break of structure, as a liquidity level. As you see here, it was swept by a week of this doji candle. So this is one of the confirmation that led me to take a trade in a downside and a short, and to take a short. So after the market took this liquidity level, it changes its direction. So this order block, that's with the liquidity is our zone that we look that we expect the market to return back and then look for some confirmations in the lower time frame. So as you see here, as I told you, this trade is somehow not good, because as I told you here, it started to take some higher highs, and then the market's direction is starting to change its direction, so to the upward, and then it's starting to be in a bullish momentum. So but here, as you see here, this order block, once the market taps this order block, it starts to go in a bullish momentum. So this is the main thing that you will look attentively, because as I told you, here the market starts to change its direction, so it can be, there is a probability the market will go to a bullish momentum. So we look for more confirmations here in a gold market. So after the market taps this active zones in a 4 hour, this zone, we go down to a 1 hour for more confirmations, because the bias in the higher time frame is somehow in a both direction. It can be a bullish, it can be a bearish one. So look how the market reacts in this zone in a 4 hour order block. Look, after the market taps the zone, it changes its direction, so it leaves some order block, some unmitigated order block here in 1 hour. But I didn't take a trade from this order block, because as I told you, it's somehow the market can go in a bullish momentum or in a bearish momentum. So once the market taps this order block, I look for another break of structure for more confirmations, and then I expect the market to return back to this order block in a 1 hour to the second leg or to the second structure that the market gives us. So after the market returns back to this order block in 1 hour, I go down for 15 minutes for more confirmations. But now I look some more confirmations, some better confirmations in 30 minutes rather than 15 minutes, because 30 minutes somehow stronger than the 15 minutes. So as I told you in the early of this video, the market can go to both direction because of some criteria that I show you in a higher time frame and 4-hour time frame. So we look for more stringent confirmations. We will fetch for more stringent and better confirmations. So here I will go to 30 minutes. So once the market, as you see here, this is 1 hour order block. Once the market taps this zone, the market starts to change its direction. So this is the last zone this is the time frame where the last zone is appeared. So this zone must be unmitigated. So as you see here, this order block, this first order block is mitigated. So we don't expect the market to go to this high, and then this order block is also mitigated here. Let me zoom in for more visualization. So here this order block is also mitigated, and then the only order block that is not mitigated is this order block. So once the market took this liquidity level as a change of character, it returns back to this order block for retracement. So once the market taps this order block, I go down to the last time frame, 3 minutes. Most of the time I look for 3 minutes for entries, but sometimes I look in 5 minutes. So today I look for in 3 minute time frame. So let's go and let me show you the last part of this trade. So this is the 30-minute order block. So here, once the market taps this 30-minute order block, the market changes a direction. But let me show you something that is more important for you. This order block is mitigated, and also this order block is also mitigated. The only order block that is not mitigated is this order block. So this order block is the active zone that we expect the market to tap and then look for entries. So once the market took this low as a change of character, we look for more confirmations like break of structures. Another structure must be created because we are looking for more confirmations. So once the market took this low, after hitting this order block, this active order blocks in a 3 minutes, I look for entry in this order block body. So I put my limit here, and then I put my TP here in a 15-minute order block. I will show you later. So here, and then I add some positions here. After the market taps this zone, I look for another entry. So after the market taps the zone, the first change of character appeared as this liquidity level. So once the market took this liquidity level and then break this liquidity level and started to form lower lows, the market leaves fair value gaps, and then this confirms me that the market is in a good momentum to the downside. And then after the market return back, look how soon I entry that. So I put the ACL, the TP here, and then the ACL in this high. So this was the trade that I took on gold market in 16 February 2026. So if you want more information and ideas and clues about a forex trading, you should to subscribe and then turn on the notification bell, so you will gain more videos. So thanks for today.